in the long run, growth drives returns in emerging markets. We believe that finding companies with sustainable long duration growth is the key to generating alpha in the long run. We focus on growth because our analysis has shown that over time, companies with a superior growth profile get a disproportionate share of returns. So we focus on growth because growth is not evenly distributed across all emerging market companies like it once was. And so a rising tide will no longer lift all boats.
We focus on growth because our analysis shows that over time, earnings win. Earnings ultimately drive stock prices. Companies with superior and sustainable earnings growth get the lion's share of outperformance. Now, you cannot just buy the asset class passively and call it a day. So therefore, we spend all of our time and energy trying to identify these emerging trends early.
So we look for 4 key characteristics. The first and most special one is disruptive technologies. These don't come around often, but when they do, they tend to have a long growth direction cycle. So it's very interesting. The second is new product cycle, and these can be found across emerging markets. The third is a large addressable market, and this is also unique to emerging markets because you have that demographic dividend, that rising income, that emerging middle class, rising incomes. So those present some very interesting opportunities. And finally, we carefully look at management and their ability to execute on their strategy. So once we identify a company that is, serving an unmet need or serving a large consumer base, creating a new product cycle, we try to figure out if there's that company's building a moat, creating competitive advantage versus its competitors.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.